Well, good afternoon or morning, wherever you are. Here we are, Ron Hauth and Robert Ede with the Real Estate Chat. Restarted after a summer away, and there's lots of good reasons why we didn't have them continuously throughout the summer, but that's for another day. For today, we have to Ron was just telling me he had a fantastic birthday with a surprise party and expertly done by his kids, and 70 people showed up. 70 people showed up for his 70th birthday. Now, I got to congratulate his family for doing that, and him for being worthwhile of doing it for.
Oh,
so, happy birthday, Ronnie.
Very much. Thank you very much. That's my best Elvis.
Okay, well, I'm going to pull up this share screen and we'll have a look at this real estate market that seems to be going sideways, and everybody's got an opinion about it, and nobody seems to know absolutely what they're talking about. There we are. We'll share that one. Okay, jumping around a bit. Okay, monthly commentary, and where's the bottom, what to do about it. So, in my opinion, we'll zip through the regular charts and then talk about some things that to deal with buyers, to deal with sellers, to deal with listing realtors, to deal with buyer agent realtors, talk about old and new financing. And I think you'd be the first to say, yes, it's true that you can find a buyer if you can offer unique financing that they can't find anywhere else. And then I'm going with another fella on the 13th of November to a as of right zoning densification seminar, where he's going to talk about the right that everybody has now to put 3, sometimes 4, sometimes 5 units on any old lot in all of Toronto. I'm sure 9 of 15 wards or something or other. And I was watching Mark when they were just discussing the bylaw of what they're going to do, because the province has said, never mind what your official plan says, you can put legal 2, 3, 4, or 5 units on every single lot. In addition to that, if you have a main street, you can put a 6-story structure up. You may have to accumulate a few other lots, but perhaps that's where the investors can be recaptured in redeveloping the main streets. Now that's going to change the whole landscape. And when I first heard about this, I said, well, they used to call that block busting, of how to destroy a neighborhood by putting up some monstrosity next to it. And I remember a while ago, they were talking about mansion homes and monster homes and this, that, and the other thing on 50 by 120 when they would put up a 3,000, 4,000 square foot house next to a little old ranch bungalow that was on the big lot because of the, at one time it was septic system. Anyway, so that's enough about that. That's where we're going to get to eventually, maybe. Bottom line on October is sales are off 20% from the 20-year average, from the 10-year average, and it was the 31st best October of the past 30. But prices aren't really disappearing. So here's Ron's famous graph going back to 2007 that shows at the same time the red squiggly line is prices, and they're coming up and coming down are sales, which go up and down. The low points normally in the middle of Christmas, New Year's. And I don't think this is your most famous chart, but it's the only one that I know that shows that many years with both price and sales together. My biggest complaint going back to the late 80s with the Toronto Real Estate Board is they show 4 years, 1 year in the current year, plus 3 over. That's just too skinny a wedge of time to really demonstrate what we're talking about. Now, I noticed in your commentary, when you put your charts, you had a little more things to say about what was happening.
Right. More than, yeah, I did see what I think is, I think when the stats are quoted in the news, I've said this before, they quote them out of context, or they don't give you the full context. They give you the prices are I was saying prices are down from a year before. They're missing the point, the shorter term improvements we've been seeing lately. The prices have actually started, the average prices started to rise a little bit, actually. And over the last couple of months, although dropped a bit in October, but we're seeing a lot more activity in the office now. I like to see the girls talking about how busy it is at the front desk, which means new listings, and offers.
And appointments
But,
and everything. Yeah,
but
you're absolutely right. The last month's news, apart from the last week of it, is old news. It's not what's happening anymore. We're
right,
now into November, and we've been really in November for 2 weeks, and so it's old news.
right,
And in a fast-paced time, like we saw for so many years of boom, 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 it was just slow. The reporting was out of date by the time it was reported. So I switched ahead to go to sales to see if I could come up with what you were talking about. But let's stick with sales. I do a little workup every time. Like you put your sales out year after year after year after year, so you show the real trend. Where mine are one on top of the other, in an effort to show the comparison between this year and the long-term average. We're following a seasonal trend. Didn't quite get up as high as we did last October, but October, November then quits and December is nothing, and we're starting all over again. So that's what this chart is about. I call it the school year. It starts in September, goes to August. So you see this little rally that happens every year in the fall, down to the bottom for Christmas and New Year's, and then the spring, and peaking out depending on the year of April or May or June. So monthly sales were different in 905 and 416. 416 is the pinky color and 905 is the bluey color, but they're both off 21% from the 10-year average. And that's what I compare everything to, the 10-year average. Toronto Real Estate Board, this is the thing I was complaining about, is that they've got 4 years here, which is really 3 years plus the current year. And sales up, just like you noticed, just like you mentioned, from the bottom in the summer, which is always slow, and almost to the level. Like weren't setting any records in June, but like this is what we're talking about is unbelievable. This is probably what we're talking 8,000 what we're seeing more normal. And then prices. This is your long-term chart on prices, which shows, I think we've talked about before, the blip and the calm, and the blip and the calm, and the blip and the calm.
yeah, you can see them if you zoom in. You can see seasonal changes as well as the long term. So spring, summer, winter, spring, summer, fall, winter, and that shows similar pattern, same pattern pretty well every year, except for very few.
That's right. That's
and
right.
long term, that even people that bought at the peaks that are obvious on this graph.
Sure, this one or this one, everybody thought, oh, gee, you paid too much, but they didn't.
Prices plummeted in 2008. People that sold lost money, but people that hung on just kept paying off their mortgage.
Yeah, and now it barely shows on this scale. It barely shows 2008.
Yeah, I think that's what we're going to see in the next few years. With this most recent blip, I think we're going to see it fairly strong. It seems to be picking up, actually. From what
Well, there's two schools of thought. One who say the sky's falling, and you look at the Toronto Star. If you made a commentary every month, almost everybody who does finally gave up during the summer and said, okay, I can't be optimistic anymore. I got to say we're in a bad time. And now they're just sort of like, if the buyers are in control, they pander to the buyers. If the sellers are in control, they pander to the sellers. Nobody talks about the whole thing. So I'm glad that you are. Okay, here's your sales and prices again, because as I said before, it's the only chart I know of that shows long-term, both at the same time. And you really have to study it, say, okay, what does this say over here? And what does this say over here to determine what it says? So prices are putzing along. We're 21% from the all-time peak. We knew that. And 7% from the highest that it was in the last 12 months. We're just half a point off of a month ago. And we're 7% from a year ago, and 8% away from the highest October that has ever been. But I don't know whether we have it see in this series, but here we go. It's the 5th highest October and September and August that's ever been in history. Fifth best. You know, it's sad compared to the boom boom, but it can't be boom boom every year.
That's right. Well, just like breathing out and breathing in, or summer and winter.
That's right. You were saying about seasonal variations.
Yeah.
Compare the Augusts, compare the Aprils, compare the Octobers to each other. And it's unfortunate this chart doesn't start at 500 or 600, so there'd be more variation than when it goes up and down, but it looks pretty darn steady through the last 4 years. There's a small variation that happened between 905 and 416, and so they had a bigger boom earlier, a couple months earlier. But now they're just sort of fighting back and forth of which one's higher, which one's lower month by month. There's only 2.5% variation between the two. And the normal situation is there's 60% to 40% ratio of 905 sales to 416. And so when they present the average price in Toronto, it's a 60-40 blend based on a weighted volume that comes up with the average. So the average right now in Toronto is 10,054, which is 21% off the peak, off its own peak. And in Mississauga, it's just a little bit short of that, 10,044, 2045, and 10,069. But the average is, again, the weighted more, in this case, down by the difference in 905. So they're 25% off their peak, but their peak was much higher. And Toronto is 13% off their peak. But that's a long time ago now. So if we look to the future, where will we be in the end of next year? If we continue to lose 1% a month, which we haven't since the boom, will that be enough to stimulate buyers? Oh, they want more. So this is a chart that I run trying to anticipate what the price might be, like the next time I'll do what it will be for November, before November's finished. Just looking at what happened over the last 24 years, and because they only have data that goes back to that far. And what's the average that's happened year over year over year over year, the change monthly. Last month, as we said, it's 0.5, 0.47. If you lose a point every month, we get down to 915. Will that be enough to bring the buyers out of the doldrums from sitting on the fence? What if the average price fell to 800,000, but interest rates rose to 7? Would that balance it off, one against the other? Because it's about monthly payments. Unless you're putting a big chunk down, it's about monthly payments.
Right.
So if you look on the market report at the very last page, it gives the stats on what happened in these various years, and then monthly in the year before, and the monthly in the year we're in. And we'll look at that a little bit later. But supply and demand, is there any other factor that affects the real estate market?
Yeah, I just thought today that I was just going to mention it actually. Confidence in the economy, which seems to be improving, but it's a bit nebulous to see, but or to calculate. But the jobs market has been extremely strong in Canada the last couple of months, and we just got the jobs numbers today: 66,000 new jobs, full time, I think, not necessarily part time. Full time in Canada, 60,000 in September. So 60, 66, September, October. And that's a lot.
Consumer confidence sure makes a difference. And rise in employment, I guess they watch that, but I think the security that anyone has in their own job.
Yeah, unemployment was down a couple of basis points. We say 6 point, was it 7 and now 6.8 or 6.9? So it's moving the right way to give.
Yeah, I think that came out this morning. You're right.
Yep. Yeah, I heard it and I thought that's great news. That precludes or eliminates maybe the possibility of another interest rate decrease this year. But on the other hand, money's starting to move with all these jobs being created. And when money moves, then things get better.
That's right. The consumer confidence boosts up, which we need for sure. If things are forecast to be bad and people anticipate it getting worse, then they won't do anything. But the reason I put this up here, supply and demand, is to say that, yes, inventory is very high. There were 6,000 sales and 27, nearly 28,000 active. So that's 4.5 months of inventory, which is far, far, far away from the average. These dotted lines are supposed to be the average, 58%. 71%, 69% above the long-term average. So that is what the problem is. There's just too many properties for sale at a price that nobody wants to pay.
Right.
So this is reflected in this months of inventory where you divide those two things together. And this is a chart that you've got going back to 1990, which I like to see.
Yeah.
It's the only chart that I know of that goes back to capture that terrible time in the early 90s when interest rates went up and housing just sat, and we had all kinds of people who wanted to sell and nobody that wanted to buy because the very same factors that are bothering us now, the rates were not what they wanted to pay, the prices were not what they wanted to pay, but the confidence wasn't there either.
Yeah, and we had 1 out of 18 properties selling then, and it's nowhere near that now. It's 1 out of 5, or not, just 1 out of a little more than 4.
Yeah, well, it's 4.5
Yeah,
months of
4.5.
inventory, which is a long way away from that, even a long way away from the 8 nearly that we had in another bad time, but nowhere near. It's double what it was when it was hot, triple when it was really hot. And
Yeah.
because here we are with less than a month's inventory, and now we're 4.5. So it's relative, but nobody thinks beyond what they're living in, the situation they're living in right now. What nobody talks about, there's a fellow this morning in the real estate magazine who did a nice analysis of supply and demand, but nobody's looking at this terminate and immediate relisting that is now a strategy that's being employed in Toronto. But Toronto is like a third of all of Canada, so that their new listings come through are padded, are well, they're padded. 25 to 33% of the inventory that comes out, and then we divide the sales into that to come up with our inventory, our months of inventory, our do-over. Somebody couldn't sell using the low list strategy, so they put it through again at what they should have done the first time. And if that doesn't sell, then they got to do a price reduction. But instead of doing a price reduction, they cancel it to get rid of the history and put it through again as a new listing. So sometimes in the course of 45 days, one property has gone through the system 4 times, and it counts each time as a new listing.
Yeah, unfortunately, they are doing it something to compensate, or hopefully they can't eliminate it entirely, but they can allow for it, or compensate for it by reporting on each listing how many times, how many property days on market there are, and how many times it's been listed.
Yes, you're absolutely right. And let me just run to that. The board puts out property days on the market, adds them all together. So now the average is 50. And the listing, the actual contract that was active at the time of a sale is 31. So almost double. And if we compare the altogether 50, over the last 5 years, it was 30. So we're 40% above that. And even the listing, it's 31, which is much less than 50, but the last 5 years was 20. So you're 50% higher using this. I believe that the difference in this property listing days on the market, property days on the market, reflects the differences in that come, the impact rather of terminate and relist strategy. That wasn't used very much, but it's certainly used a tremendous amount by the realtors that are members of the Toronto Real Estate Board.
Yeah. So, I think too, we're coming into typically the slowest time of the year, the winter and the Christmas holidays, and with prices low and interest rates more favorable levels and low relative to what they were. I think there's some opportunities here to buy without competition, and buy. I'd have to remember to buying not quite a forever home, but pretty close. Hang on to it and ride out the ups and downs for the next while. But low prices, low interest. That means lower land transfer tax too, lower expenses. So that's a big bite they have to add, especially in Toronto. I think there's some opportunities.
Yeah, I think that's something that we should emphasize, and maybe that's where we can wind this one up before getting on into too many other complicated things, because we've been yapping away here for a little while. Is that the fourth quarter never sets any records, but the fourth quarter may just supply the one house that you're looking for that will meet your school needs, meet your transportation needs, meet your neighborhood needs, and meet your money needs too.
Yeah.
And what you have to look for is if you've got a need that requires special financing, you need to find an owner, perhaps who's lived there for a while, that can satisfy. Because almost everybody is sure that in the next year we're going to have interest rates lower than now. And all you have to do now, you don't have to wait for 2 years, you don't have to finance for 3 years. You can just finance a portion of it for 1 year.
Right.
And refinance. So rather than, I had originally thought that we'd go on to a whole other topic, but let's not bother with that, Ron. I know you've got a busy day that you've been going around getting a Matterport done on a new listing of yours, and you got a condominium that's sold, and you want to wind that up.
Yep, and the owners are very reasonable on price, by the way. They looked at prices, and as over the last few months, and as prices seem to be declining, they said, "Oh, we're going to have to lower our expectations." And they came up with well, we came up together with I think, a very reasonable price. And they know they're not going to hang on for 6 months with it for sale. They're going to try and get it out in the 30 to 60 days. So they're very astute the way they follow the real estate market, the prices.
Well, I think if someone's a buyer, that's what they want to look for. Because if this fellow's 92, you told me earlier, and he's lived there for quite some time, then okay, so it's gone down $200,000 from what it very much was. He's absolutely serious about selling it now. He doesn't need that asset. It doesn't serve his needs. He wants the money, and then he's going to distribute that money however he wants for the rest of his life. And that's what if you're looking for to buy something, that's what you're looking for. Someone who you can talk turkey with over the bargaining table, who wants to talk about your money in the very same way that you want to talk about his house. Dead serious and on the very best possible terms.
Yeah, absolutely. And instead of fooling around with it for months trying to get the last dollar out of it and then dropping it, he says go right to the heart of the matter, get the price right, and get it done.
Well, you're lucky to have that listing, and that guy is happy to.
I'm thrilled.
I think he's lucky to get you. Yeah.
Yeah. Thanks.
All right. So I want to thank you again, Ron, for helping me do these stats, and you sending yours over. You got yours done a lot faster than I did this time, and bringing in your real life examples of things that are reflected in the charts and some things that aren't reflected in the charts. They're just reflected in the real market as you experience them.
Yeah, and I think the news reporting the stats misses the point more often than not, and give you the wrong impression. So,
well, I think that's a very good point. That when they look at something month over month and year over year, and only that way, because that's the way the stats are spoon fed to them, there's no understanding of what's really going on in the greater in the greater picture and on the longer term.
Yeah.
So I'm going to say let's wind her up, and we'll send this off and get it out onto the YouTube.
Okay, and thanks for having me on.
Right, Ronnie.
Right. Boy, I do tend to wander sometimes. Sorry.
Oh, no,